So I never ever get a chance to speak to young people. And this past weekend, I was invited to go and speak at a center. And when I say young people, they were like between ages of like 18 and 30. Okay. So a lot of times when I'm speaking real estate and I'm teaching it, I'm talking to like fund managers, or I'm speaking to seasoned investors, people already in real estate, corporate people, or even people who might not know real estate, right? But they have money, like they have wealth and they want to work with me or partner with me. So it was very exciting to be in a room full of youth. And it actually took me back to my roots. When I first got started in real estate, I was only focused on things that I could do with no money, no credit, no banks, no loans, things like that. So I want to share with you, especially if you're a young person, I want to share with you some of those strategies that I was able to teach this past weekend to other young people. Okay, I'm not going to turn this into a full tutorial because each of these strategies I literally have built courses around. Like it goes deep, but I at least want to give you some awareness. So if that is something that you're interested in, learning how to get into real estate with no money, no credit, no banks, I'm going to show you, at least give you a glimpse into how to do that right now. So don't go anywhere. Okay. All right. So I'm going to just read some of the questions that they had and I'll go into you. So the main things I'm going to talk about today will be subject to, which is what I call mortgage takeovers. I'm going to talk to you about owner financing. I'm going to talk to you about mortgage wraps, Airbnb. I'm going to talk to you about some non-traditional lending products that are out there. And I would likely talk about Section 8 because that's just what I like to talk about. And I'll also speak to you about adverse ownership and properties. We also call those zombie properties. Okay, so let's take them down one by one. First person here is asking me about how they can start getting capital up to invest in real estate. Hands down, I'm going to suggest that you get into wholesaling. If you don't have any money, you don't want to get into banks or loans, you don't have any credit, wholesaling is going to be my suggestion for you, because wholesaling is going to help you build capital. So you heard of like flipping houses? Okay, so in wholesaling, we're essentially flipping paper. We're flipping contracts. Let me give you an example that's not real estate related, and then I'll come back and help you understand how that goes with real estate. So when we talk about wholesaling, the example I used over the weekend is buying bundles of hair, right? Buying bundles of hair. So if you know anything about hair bundles, all women now, I used to say black women, all women now are wearing like the wigs and the extensions and things like that. And they're very expensive here in the US. The way that it works in wholesaling is a bundle of hair, you'll likely get it from China or India or somewhere like that, and you get it for a really inexpensive price. I'm going to make up numbers because I don't know hair. I know real estate. Okay, so let's say for $20 in India, you can get a bundle of hair. So you're going to pay the $20 in India. You're also going to pay for shipping costs, whatever that costs. So let's say it's $20 for the hair and then $10 to have it shipped to you. You are then going to find someone here in the US who wants to buy bundles, which is very popular, very easy, right? And let's say you're going to sell that bundle for $100. You don't own a hair company, right? You are not the owner of the hair company in China at all. You are just a person that found that they had it for a great price, and you're buying it because you know here you can sell it for an even better price or a bigger profit for you. So let's say you got the hair, came in the mail, whatever, and now you're going to go ahead and sell that bundle of hair for $100. You keep what's in between. So I spent $20 to get the hair, $30 in total because I paid $10 for shipping. I sold it for $100, so I keep the $70 profit in between. Okay, I never owned the hair company where the hair came from. I am simply the person that facilitated the purchase and the sale of this bundle of hair between two separate entities, two separate people outside of me. This is also explained pretty well in Rich Dad, Poor Dad with Robert Kiyosaki, which if you're watching this video, I'm sure you're probably reading right now about wealth. Add that book to your repertoire. Okay, wholesaling in real estate is the same exact thing. The reason why that person bought the bundles of hair from China is because they know in US all the women are buying hair bundles. It just makes sense. Okay, so when you're understanding the world of real estate, you'll understand that many buyers in real estate all want certain things at a certain price. So you'll go to Bill over here and Bill says, hey, Ashley, I have $80,000 to invest, this is what I'm looking for in a property. I want 3 bedrooms, 2 bathrooms, and I want it to be in this neighborhood. I have $80,000 that I want to spend. Cool. Now you're in conversation, with a friend, I don't know, whomever. And let's say your friend Yusuf says, yeah, I got this 3 bedroom, 2 bathroom house here in Houston, and I don't know what to do with it. I think I just want to sell it and just get rid of it. And you're like, okay, well, how much do you think you might want for it? I probably just want about $50,000 for the house, really. Ding, 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 ding. Wait a minute. So Bill said he will pay $80,000 for a house like this. My friend Yusuf said he wants to sell a house just like this for $50,000. Think back to the hair, right? I do not own Yusuf's house. I have nothing to do with his house. All I'm going to do is facilitate the purchase, not even facilitate the purchase, right? At this point, I'm just introducing 2 separate parties to the same deal. Okay, so I'm going to go to Yusuf and say, you said you wanted 30? Cool, I'll pay you 30 for it. I don't have 30. I'm not paying 30, okay? Follow me. I'll give you 30 for it. Cool, I'll get him under contract for 30. Then I'm going to go back to Bill and say, Bill, yep, I got the house that you said you wanted. You said you could pay 80 for it. I'll take 80. All right, cool. Bill's happy. Yusuf's happy. Everybody's getting what they want. You keep what's in between. Okay, so the difference between 80,000 and 50,000 is $30,000. You keep what's in between. Why don't you introduce them? Because if you introduce them, then you don't have a job, right? You're not going to be able to wholesale it. They're just going to work together. So you want to be the person that's working with the seller and the person that's working with the buyer. Again, I don't want to turn this into a tutorial, so I'll let it rest here, but wholesaling is what I would recommend if you don't have any money, you don't have any credit, you don't want to work with banks, but you want to find a quick way to build capital so that you can get into real estate investing. One other note on wholesaling, I like it, and I like that I started there because you see so much. You get to see like all the buyers that you're working with, you'll get to see all of the kind of deals that they're doing. Okay, what are they looking for? What are their criteria? They're going to tell you because they need you to find it. So you get to see all of the cool, creative things that they are doing on their side, and you begin to learn it. You also will be working with sellers, which is awesome because now you're learning how to sell. You're learning how to listen. You're learning how to provide a service, provide a product. And then also you'll be working with other wholesalers. So now you're learning how to partner, how to leverage the talents of other people, how to, leverage your time, how to build businesses together. So these are beautiful, beautiful, in my opinion, lessons that you learn in wholesaling that you wouldn't otherwise learn if you just jumped right into another part of it. All right, I digress. Wholesaling, you got that? All right, the next example is someone talked about like, how do they, okay, I think what they were trying to get at is like, if I have an extra room, I heard that I can Airbnb it out and things like that. Airbnb is another way where you can get in with no money, no credit, and no banks. I'll give you an example. Most of the examples I use in these obviously are with family because y'all know in my roots, I always spread the money with my family. Anyway, so I had a female family member who had a boyfriend, and she was spending like 100% of her time at his house. She was sleeping there every night. She only went to her house to maybe, I don't know, grab some stuff every now and then. She was still paying rent there, but she just spent most of her time at her boyfriend's house. So of course, me as a real estate investor, hey, you need to Airbnb that apartment out. While you're not there, Airbnb it out. She's like, well, what if, I want to come home sometimes? And then just block those dates out. If you know you want to come home every Wednesday because you need me time on Wednesday, block those dates out. The other days when you are not there, you need to have that property making money for you. And so she did that. She spent most of her time at her boyfriend's house. She turned her apartment into an Airbnb. Obviously, it's already furnished and everything because she lives there. And she was able to make a profit from her apartment that was just sitting there. This person specifically asked me about, can you do that with a room? You absolutely can. You can just rent out a room in your apartment or a room in your house. You absolutely can, and make that area profitable for you in Airbnb. Again, I'm not going to get into all the logistics of it because we'll be here forever. I just want to make you aware of some things that you can do. Okay. So we talked about wholesaling. We talked about Airbnb. Let's talk a little bit about mortgage takeovers or subject to. So one example of mortgage takeover that I did is I had a coworker. The coworker, her family dynamic changed a bit and she needed a larger space to move into. The issue was she had bought new construction and she had only lived there for a couple of months. So she didn't have enough equity to sell. As a matter of fact, if she wanted to sell, she would have to bring money to the closing table. And she's like, I don't want to do that. I don't want to have to bring money to the closing table. How can I sell this house so I don't have two mortgages that I'm paying so that I can move to a bigger home? So I stepped in. All right, cool. I'll take over your mortgage for you. She's like, what? I'll take over your mortgage for you. So I did that. She moved out. I took over her mortgage. Her mortgage payment was, let's say, I don't want to get too deep into numbers because I really don't want to turn into a tutorial, but I feel like to illustrate what I did and how it's profitable, you need to hear it. So I'll make some numbers up. Okay. Let's say her mortgage was $1,000. Okay. And maybe she still owed $100,000 on the house. I'm just trying to make up some nice even numbers. And let's say her interest rate was 3%. Okay. So I have those three items. I know that she still owes $100,000. She's paying $1,000 a month and her interest rate is 3%. I took that over and now I have ownership of the house. The mortgage is still in her name. It's her mortgage, right? But I took over ownership of the house through a deed. And now I have a moral responsibility to make her payments. I don't want to live in the house. I could, right? I could live in the house. I could rent it out. I could just resell it. I could Airbnb it. I could do whatever I want to do with it. It's my house. Okay. What I decide to do with houses like that is something called selling on a wrap. So now we're getting into a fourth thing. Okay. So we talked about wholesale, Airbnb. I just talked to you about taking over a mortgage. Literally taking over a mortgage is between you and the seller. You don't have to get involved with the bank. We are not talking about a qualified loan assumption. Okay, that's where you have to qualify for the mortgage and the bank gets involved and things like that. You have to get approved. I'm talking about something called an unqualified loan assumption, also known as subject to what I call a mortgage takeover. Unqualified loan assumption means you do not have to go through the bank. You're not going to qualify. You're not even going to alert the bank. Okay, it's between you and the seller. You guys have an agreement. You drop the paperwork at title, and you are now in possession of this house. Okay, let me go into the wraps. So what I did once I gained ownership of this property is I sold it with owner financing on a wrap. That means since there's already a mortgage on this house, I, with the help of a title company, created a mortgage that wraps around the current mortgage. And when we say wrap, it just means whatever the current mortgage is, you have to do something higher or bigger on top of it, right? If it's anything lower than the current mortgage, then you're going to be in the negative paying the difference. You want to be in the positive or the higher for whatever that mortgage is. Here's what I mean. So I told you her monthly payment is $1,000, right? So that means whoever I sell it to on a wrap mortgage, I have to charge them more than $1,000 because I still have to pay off the $1,000 that's owed on her mortgage every single month. So I have to charge them something more. So in this situation, let's say you charge them $1,500. Okay, so every month that person is going to come in and pay you $1,500 for their mortgage payment. Of the $1,500, you're going to take $1,000 of it to pay the mortgage that's already in there, on there from your friend who got the house from, and the other $500 per month stays with you. Same thing goes with what's owed on the mortgage. So in this example, we said that she owed $100,000 on the mortgage. So when I go to resell it on a wrap, it has to be more than $100,000. So let's say I sold it for $150,000. Okay, so it has to be higher. Same with the interest rate. Interest rate we said was 3%. So when I give an interest rate to the person I'm selling it to on a wrap, it has to be higher. So let's say I did that at 5%. Okay, I'm just making up numbers here. Oh man, I hope I don't get confusing because now I'm about to get a little deeper into this. Okay, so on a wrap, there are three main ways to get paid when you sell on a wrap. The first way is going to be a down payment, right? Just like when anyone gets any kind of mortgage, there's a down payment expected to be paid. So you're going to receive a down payment from the person you sell this house to on a mortgage wrap. Typically it's about 20%, but for now, I'll just make up a number and say, okay, maybe so for this house, I got $30,000 as a down payment. That's the first profit center. The second profit center is going to be cash flow, which we already talked about. It's going to be $500 per month, right? I have to pay $1,000 per month to cover my friend's mortgage, but I'm making $1,500 a month from the person that I sold it to on a wrap. So I get the $500 cash flow every single month. And then finally, you get paid on the back end with the difference that you create in the interest rates. So if the current interest rate is 3% and I'm charging somebody 5%, that extra 2% grows over time. And so let's say if that person I sold it to, they sell it, right? Or they refinance or anything like that, I get paid out the equity that I created with the interest rates. Okay. I'm gonna keep that simple. I have a whole course on that, and I'm telling you, it takes people 6 weeks to get it. I'm trying to teach it in like 6 minutes. Anyway, we just covered a couple things. Okay, so first we covered wholesaling, we covered Airbnb, we covered taking over someone's mortgage, we covered selling on a wrap. Let's talk a little bit about owner financing. Okay, so owner financing, I'm just referencing to see what the actual question was, so I'll make sure I'm keeping it consistent. All right, so owner financing, they're pretty much saying like if they know somebody who's willing to sell the house to them with monthly payments. That's exactly what it is. Owner financing is when you work with a seller and they agree to accept monthly payments over time. They become essentially the bank for you. I love owner finance deals, right? Because I don't have to go through banks. I don't have to prove my credit worthiness, right? And in some instances, I don't even have to have money. Here's what you're going to do with the owner financing. So first, again, that's between you and the seller. The difference between owner financing and subject to is subject to, we got a mortgage. So we're taking over the mortgage subject to the mortgage's terms. Owner financing, there is no mortgage. So now it's just strictly between me and the seller and what we want to work out. Once you get ownership of that property with owner financing, it's endless what you can do with it. You, again, are now the owner. You can sell it on a wrap. Because remember, now you and the owner have a mortgage together that y'all just created between you guys, so you can wrap it. You can rent it out. I love renting out to Section 8. You can Airbnb it. You can it's your house. You can do whatever you want to. You can live in it, whatever you want to do with it, okay? But owner financing is another way where you can go in with no money, no credit, and not have any banks involved. I'm giving y'all the game right now. There's something else too. Somebody was saying, they were talking about tax liens and things like that. I'll give you 2 instances with